Hello and welcome to the Flying Frisbee with me, Dominic Frisbee. Just now a car chooses to drive past. So there have been two very bullish developments for cryptocurrencies of late. First, Donald Trump, who is currently the favourite to be the next US president, is declaring, "I am very positive and open-minded towards cryptocurrency companies and all things related to this new and burgeoning industry. Our country must be the leader in the field. There is no second place." Now, those words will have been written for him, but they nevertheless show that policies, should he win the election, as currently looks likely, will be very favourable. And that has to be good for the sector. Secondly, the Ethereum ETF got greenlit in the US about a week or two ago. So today I want to consider the implications of that and give our outlook on the sector more generally. So first up, Ether itself, Ethereum, the coin, it's risen by about a third from 2,900 a coin to within spitting distance of 4,000. That's good. I must confess to being somewhat flummoxed by Ethereum. Briefly, its founding principle is to use blockchain technology for purposes beyond an alternative system of digital money. It was known as the world's first programmable blockchain, and it can be used to, and I quote, "codify, decentralize, secure and trade just about anything." My friend Charlie Morris of ByteTree, he likens it to a decentralized app store, and you should all read Charlie's letter, by the way. I'll put a link in the comments. So developers can use the platform to build and publish smart contracts and distributed applications, dApps, and it's a kind of marketplace for financial services, DeFi, NFTs, non-fungible tokens, games, apps, all of which can be paid for in Ether. That's kind of how it works. Now, the Bitcoin maximalists, the purists, do not like it. Its blockchain is not that robust. Ethereum is not properly decentralized. The numerous forks that have taken place in reaction to hacks would not be possible with a properly decentralized platform. Too many coins were pre-mined and handed out to founders, and Ethereum 2.0 met with delay after delay. Transaction costs, known as gas fees, can also get exorbitant. Well, all that may be, but its founder, Vitalik Buterin, is a billionaire many times over by the time he was 28, just in case you weren't feeling inadequate enough this morning, or today, depending on when you're watching this. He'll know all of that, and he's a genius, and I satisfy myself but that by owning Ethereum, I am effectively long Buterin, not unlike being long Elon Musk by owning Tesla. Ethereum also has numerous competitors, not least Solana, but also Binance Smart Chain, Polkadot, Cardano, Terra, and Phantom. And that may or may not be a good thing. Competition breeds excellence, but it also makes things harder. Now, many of these are technologically superior. They're faster, they're more robust, but price-wise, Ethereum has the network. Now, Ethereum has been a laggard price-wise. Its all-time high was 4,800. It's still almost $1,000, 20% below that. But it does tend to move later in bull markets, and by more. So, despite all of this, Ethereum remains, by some margin, the number 2 cryptocurrency by market cap. 465 billion market cap, followed by Tether, which has another purpose altogether. That's about 110 billion. Then Binance Coin. And by way of comparison, HSBC has a market cap of 165 billion. So Ethereum's 3 times that, and you thought it was a passing fad crypto. So what can we expect with the launch of this new TF? I've every expectation that it'll follow the usual patterns seen with gold, silver, Bitcoin and others besides. There'll be excitement going into the launch, as we're seeing now, along with plenty of hype. The clever people who've already bought the rumour will then sell the news, and the price will fall back a bit. But in the longer term, the launch of the ETF enables more money to come into this market, particularly institutional money. The ETF legitimizes Ethereum, but also it means that boomer capital, so-called boomer capital, which might be a bit wary of buying Ethereum through exchanges, prefers traditional finance, brokerages and so on, that capital can come in too. So in short, over a 1 to 3 year time scale, this has to be considered a bullish development. Other countries around the world will surely follow America's lead, which in turn will enable yet more capital to enter the sector as more ETFs list. The FCA are about an eon behind the curve in this, sometimes perhaps in about 2050, when the Bitcoin price is in the millions, that it might allow ordinary UK investors to buy crypto ETFs. In my own portfolio, I'm about 85% allocated to Bitcoin, maybe a bit more, and I have roughly 10% in Ethereum, and the rest is made up of altcoins, shitcoins, which I mostly wish I'd never dabbled in. I have to say, in a bull market, you will make more money from Ethereum than from Bitcoin. Indeed, you'll make even more money from little-known small-cap coins, meme coins, shitcoins, and so on. And your kids probably know the names, I don't, than you will from Ethereum. But you will also lose more money, especially when the rug pulls come. This is why so many veterans of the sector end up as Bitcoin maximalists. Nevertheless, some little-known hype coin is more likely to go up 100 times than Bitcoin is or Ethereum is from these levels. I'm also interested in the broader implications of this Ethereum ETF. Presuming it works, it will open up the door to the launch of numerous other crypto ETFs, which might be playing with fire. The SEC will have to draw the line somewhere, but that line gets harder to draw the more crypto ETFs that happen. Front-running the next ETF might be quite an effective strategy, by the way, and I would have thought Solana, Ripple, Cardano, Polkadot, Bitcoin Cash, they're amongst the most likely candidates next. Though the Ethereum ETF came as a surprise to many, as it's not really clear what Ethereum is when looked at through a regulator's eyes. It's not really a security, it's not really a commodity, and so on. And this gets even vaguer for some of those other ETF candidates I mentioned. JP Morgan's on the record saying there won't be any others, though JP Morgan's track record calling crypto is hardly stellar. Broadly speaking, I would say the ETF is also positive for Bitcoin, though some capital might abandon Bitcoin ETFs for Ethereum. In the long run, it legitimizes the sector and enables more capital to enter the market. Bitcoin, meanwhile, is currently within kissing distance of its all-time highs. It remains in lockstep with the Nasdaq, or more specifically, the leveraged Nasdaq 3X ETFs. Generally speaking, the outlook for Bitcoin, especially now post-halving, and crypto more generally, is looking pretty positive. Not for the first time, I urge everyone to at least own a tiny amount, because its potential is so extraordinary. The risk is not owning Bitcoin, but not owning it. How to play it? It is, of course, impossible for UK investors to buy the Ethereum ETF thanks to the short-sightedness of the FCA, the Financial Conduct Authority. It's just embarrassing at this point. MicroStrategy, Nasdaq MSTR, is a company that's done incredibly well since I recommended it a year ago. Last summer, it's up 5 times, and that remains the easiest way for UK investors to get exposure to Bitcoin through a traditional broker. But it is very volatile, and it's very hyped up at the moment. Thank you very much for reading this. Please subscribe to the channel, please subscribe to my Substack, and I will be back with another video very soon. Until next time, goodbye. Oh, and if you're in Edinburgh this summer, make sure you come and see my show all about the history of mining. I'll put a link to that in the comments, and also a link, my first book, Life After the Stake, is back in print, and you should all read it. Until next time.